Welcome back. You're watching us here on Halftime Report. One of the segments that has been doing well for the markets has been the hotel segment. We'll talk about that in just a bit. The Nifty is at the low point of trade, but we do have numbers coming in from Jyoti Labs as well. Revenue growth of 0.2%. The stock's up by about 3%. Remember, it's been a big outperformer over the last many quarters, but this time around, slowdown catching up with Jyoti Labs as well. They've been outperformers in the industry for the last 7 to 8 quarters. But the consumer slowdown has meant that the net profit has grown just about 1%, and year on year the revenues have been absolutely flat with just a marginal uptick that we've seen in the EBITDA as well. We'll get in some more details from the presentation as it is uploaded, but let's go forward with our conversation that we've lined up with the Managing Director at APJ Surendra Park Hotels. Vijay Devan, the Managing Director, joins in. Thanks a lot, sir, for joining in. The hospitality segment is doing well. It's a seasonally weak quarter for the industry, the second quarter that is. But your net profit this time around, as promised, was boosted by lower finance cost as well. So all eyes will now be on the expansion plans and the second half of this year. So to put things into perspective, if you could start by telling us what was the average room rate and occupancy in the second quarter, what's your outlook for this year when it comes to occupancy and the overall performance?
Okay, thank you. It's great to be back on CNBC, Mangalam.
I think you're on mute, sir. We'll just try and patch that audio. Go ahead, sir.
Is it okay now?
Go ahead.
Are we okay?
Yes, Mr. Devan. Yes, go ahead.
It's good afternoon. It's great to be back on CNBC, Mangalam. So this has been a really remarkable quarter for us. There has been a revenue growth of 10%. We have had an EBITDA growth of 11%. The PBT has grown by 82%, and the PAT, of course, grew as we promised by 80%, and it's moved up from about 15 crores to 27 crores. The most important thing is that the earning per share have grown by 47% in this quarter, from about 0.85 to 1.25. In terms of your question, in terms of occupancy and ARR, we have in quarter two India's leading occupancy of 92%, and we have recorded an ARR growth of 4%. And we expect this to significantly grow in the coming quarters with the opening of 2 of our new palace hotels, which have actually just opened. We have opened the Lotus Palace at Chettinad, and which has had a starting ARR of around 15,000. And we have also just opened the Ranbas Palace at Patiala. And these 2 palace hotels are going to really set a new benchmark in terms of product design, as well as in terms of customer experiences. At the Ranbas Palace in Patiala, we opened the hotel on the 1st of November, and we are at the moment recording ARRs of 35,000. We expect these ARRs at this hotel to actually go inch up to about 80,000 as we go along into the season.
Mr. Devan, good afternoon. Thank you so much for joining in. Since you mentioned significantly growing your ARR for the full year, could you quantify that significant growth for us?
The hospitality industry is at the moment in really a super cycle, and there is a huge demand-supply mismatch, and particularly both in the leisure segment as well as in the key growth markets where we are present. We are present in all the metro stations, and in these key growth markets, the demand is actually expected to grow by 10.6% compared to supply, which is going to come in at 8% over the next 3 years. Similarly, the similar situation exists in the leisure markets of India, right. And we expect the ARRs to continue to rise, and we expect significant growth for ourselves. We are committed to double-digit growth in the quarters ahead. With new openings, as I mentioned, we have opened the 2 palace hotels recently. We are also going to open another 100 keys as we go along in this financial year, which is going to be at Jaisalmer, at Ranthambore, and of course at Dehradun.
All right, 100 new rooms along with 2 palaces coming in as well. I was asking you about your expansion pipeline. You preempted that and perhaps answered that already. But 80,000, me and my co-anchor Hormaz out here, we were just wondering if, we're the target audience for that. The minute you said 80,000, we immediately put our phones down and said, no, that we're not the target audience for that. But I can tell you one thing. I'm a target audience for Fleury's. I have been, visiting Calcutta since my childhood. It's a strong brand. And as you promised last time, you opened a couple of Fleury's outlets in Colaba itself. And they are full. They're doing extremely well. One of the regular visitors out there is me. If you could tell us, the Fleury's expansion plan that you've laid out for the second half of this year, and what kind of money can you generate from a brand like this? Because while it is iconic in Kolkata, outside of that, it competes with your regular established coffee and cake chains. So
Correct.
What's the competitive moat out here? What's the kind of margins and revenue that you're looking from each of these Fleury's stores?
So thank you, firstly, Mangalam, for visiting our stores in Colaba and being a really loyal customer to us. So Fleury's has done remarkably well, let me tell you. In Q2, we have had 41% growth in terms of Fleury's business in Q2. And most importantly, we have consolidated our position in the city of Mumbai. Today, we have 16 outlets in Mumbai. We have opened 2 new flagship outlets of Fleury's, one in BKC in the Crescenzo building and one in One World Center at Parel. So the total number of outlets at the moment of Fleury's in Mumbai is 16. We have also entered the city of Hyderabad this year. And we have just opened in Hyderabad, and our second outlet is about to open in November in Banjara Hills. Very critical for Fleury's is that we plan to add, we have currently about 95 outlets. We plan to cross the 100 mark during the course of this month itself. And by the end of this financial year, we should be at 120 outlets. And thereon, we plan to add 40 to 50 outlets of Fleury's in all the key metro stations every year to take it to about 350 outlets or more over the next 4 to 5 years. And Fleury's, one of the most important thing is it's an iconic brand out of Calcutta. It's famous for its rum balls, and this product features in the 26 best desserts in the world. And we have industry-leading margins in Fleury's, and this business in India is expected to grow at a CAGR. On the whole, the bakery and confectionery business is expected to grow at a rate of 18 to 20%. So we are right there in the right business at the right time.
Due to paucity of time, Mr. Diwan, combining 2 questions into one, and if you could give us a brief answer for both. What are your target margins for the full year? Do you expect to remain in this 35 to 40% range or cross that? And B, the expansion plans that you laid out both for your rooms and for your Fleury's, how are you planning to fund that? Through internal accruals or more debt?
So our firstly, in terms of financials, our key strategy is to remain net cash positive. The internal accruals are going to be used for the development process. Most importantly, we are going to develop 3 large projects. We are going to start work on our 3 large projects during the course of the new year, in the next calendar year. And we are going to undertake development work of approximately 10 lakh square feet, which these projects are going to be at Pune, where we plan to add 200 rooms. We plan to add additional 100 rooms in our hotel in Visakhapatnam. And significantly, we plan to open a 200-room hotel on the EM Bypass, our second park hotel on EM Bypass in Calcutta, along with 100 service apartments. So the EBITDA margins will continue to be constantly improving. We expect that as we go along, The efficiencies, improving efficiencies is one of our key focus areas, and we expect the margins to improve by 1 or 2 percentage points as we go along.
All right, and just a quick one, Flurys as a proportion of your revenues will be how much going forward?
So last year, Flurys business was roughly about 8%. This year, I expect this business to be anywhere between 11 to 12% of the total business.
All right, and as you go along, add more stores, it would obviously increase in contributions. We'll keep asking you about that at a later date as well. But for now, thank you so much for joining in. Good luck for the second half of this year. And while everyone's talking about that K-shaped recovery, it will be very interesting to see how the ARR, so that 80,000 rupee property, go along in the second half of this year as well, until Hormaz and I will continue to munch on some of those cakes from Flurys itself. The stock up about 1%. The management guides for improvement in the second half, with improvement in the margins by about 1 to 2 percentage points going forward as well. Take a short break, come back, get you more on the markets and all things stock specific.